All right, Todd, here you go.
There
What's
you go.
going on in the market?
Well, thanks, Mike. Thanks, everybody, for joining us today. We're going to be going over the Greater Phoenix Metro. Oh, boy, there we go. Tongue-tied already. But good morning. We're going to be going over the Greater Phoenix metropolitan area and suburb real estate statistics for the week ending January 30th. And we'll start right in there. 78 days close on market, a 4.19 month supply. Absorption rate is at 23.89. An average list price hovering about 725,000. Average sale price at about 528,000. List price to sale price retention's pretty low at 95.7. Our inventory is down ever so slightly, but continuing to drop. We're at 16,651 available residential properties. Pending is sitting at 3,700. Our closed inventory for our closed units for the month are at 3,337. Looking at new listings, we took 2,093 listings this past week. That's a good sign. We're over 2,000. We're not at 2,400, but we need to continue to do that. It's really one of the saving graces as to why we're not at a lower days on market at this particular point. 106.3 days on market for active and closed at 78. Look at our price ranges in the bottom right-hand corner. 56.93% is the under 500,000. That means that 56.93% of the entire MLS inventory is under 500,000. If you'd like to see those categories, just look right there. It's done by price range. Then, of course, our $500 to $1 million price range is sitting at 31%, and our $1 million price range at 11.9%. So what are we looking at today? Today, we're looking at the fact that 2,093 is a really good number for listings. However, significantly better than 1,896. And it is even good in comparison to last year at 2,027 listings taken. However, it's just short of the mark. It's causing us to have a decline, continual decline in our inventory. We haven't seen a positive increase in inventory in over 4 months now. We're looking at coming soon. So there's 16,651 total properties available in the MLS as of Friday morning. We're sitting at 520 coming soon, 13,461 single-family detached, 2,578 builder properties, and that leaves 16,595 properties that, of course, are non-distressed. Distressed inventory is just not there. It still isn't, so there's nothing to worry about from that perspective. Looking at pending, we had it's green. Yes, we had an uptick, believe it or not. We're at 3,700. We were at 3,435, but if you slide your eyes to the right, a year ago, we were at 4,877, 5,700 in 2021. That was about the only good thing coming out of 2021 in the early part of the year. But 57 is where we belong, 5,500 right in that particular price range. So when we have 16, 18, 20,000 properties in the inventory, when we have 2,400 a week coming in for new listings, we're able to handle the 5,500 properties in escrow at any one time. Right now, we don't, which is kind of anomalous because as we get down to the bottom here, it just isn't really making a lot of sense right this particular moment. 3,337 is where we are month to date, almost at month end. 5,642 is where we were a year ago. And again, the final year ago number was 6,510, but we're not quite there yet. So just week over week perspective. So 4 months supply, and we were at 5.65 last week. We're down about 25%. We were only at a 0.8 month supply. So everybody's like, wow, this is great. We have inventory. Yes, it is, but we have to be really, really cautious. We need a 2.5 to 3 month supply to really be in the sweet spot. Our pricing is staying in good numbers, believe it or not. We're not going to be, we don't anticipate exceeding that 8% average price increase over the year, but we'll have to see where that's actually going. But the big numbers are going to be right down here on the list price, the sale price retention, 95.72. In a balanced market, we're at 97.8% right here. And that is where we need to be. So when you're taking the closed inventory of 3,300 and you've got your pending units of 3,700, with only 16,651, you can do the math. You can see that it's not putting us in a very good position. However, we've got inventory. We don't have buyers yet, but yet we're at 95.72%. Why is that? This is the difference between the list price and the sale purchase price at the time the offer was accepted. So not the original list price. And so when we look at this number and it's not 97.8%, it means the sellers are still giving the farm away, if you would. They're really discounting off of the list price by almost 5%. And that doesn't mean, this has nothing to do with concessions built into the contract. We're also seeing significant amount of concessions in the marketplace as well. A little too much to really be around 4%, a 4-month supply. If we were at a 5 or 6 month supply, over 5, over 6, I would say definitely that makes a lot of sense, but not when we're down around 4. So let's see what this happens. We'll continue to watch this week over week for you and report what's going on from that perspective. Mike?
All right, I appreciate it. And I was just thinking, we're going to talk about it next week. But for those of you that have this memory, and I'm going to punish builders because they reduced commissions.
Yep.
Get over it. We just bought a property last week from a builder, 5% co-broke.
Awesome.
Typical co-broke we're still seeing on the MLS is 2.5%. So get over it. Put more money in your pocket. Look at new builds and these spec homes on the MLS.
Yep. Incredible incentives coming.